Thank you so much for joining us. We're going to get rolling. Welcome to this Placer AI webinar, a mall update, a yearly review, and what's coming. We're going to look today. We're going to take a look back at kind of the biggest takeaways that we have from 2021 and what the data has shown us from there. And then we're going to look forward at the new mall, quote unquote, and how this sector is moving forward. And finally, as always, we will make sure to have time for questions. If you have a question at any point throughout the conversation today, please plug it into the Q&A button situated at the top or bottom of your screen, depending on how you have Zoom configured. I am very, very excited today to have this specific panel, specifically Billy Taubman, the president and COO of Taubman. Thank you so much for being here. We really appreciate your time.
No problem at all.
Yeah, and this is obviously, and then one of maybe Ben, you were the first guest on one of our webinars when we started this, and now not of Trademark Property, but of Placer AI, Ben Witten. Thank you so much for joining.
Happy to be here, Ethan.
So let's go in. We'll do a really quick introduction to Placer data for those of you who are new to it, and then we will dive into the content itself. So what is the data you're going to be seeing in the backdrop? Placer observes a panel of over 30 million devices throughout the United States. Very critically, this is all anonymized aggregate data, so we are GDPR and CCPA compliant. We then analyze that data with AI and machine learning algorithms and use those algorithms to make estimations on visits to any retail location anywhere in the country. And we're able to show a robust amount of data on everything from the true trade area, visit counts, the customer journey, cross-shopping, and a whole lot more. For those of you who are interested, there is a section on our website called The Square that is the home to our free tools. We also have a free version of our premium product that you can try out at placer.ai. And with that, we can dig in, and I guess we'll start by looking back at 2021 and what was, kicked off as a very difficult year, but ended on a much higher and more positive note. And, Billy, I'll start with you here. When you look back at 2021, what was the biggest takeaway for you when thinking about indoor malls?
Well, I think the biggest takeaway, and now don't kill me for saying this even, is that the aggregate data doesn't really represent what's going on in individual properties. No. And there's been a widely divergent recovery. And the dominant malls, the best mall in every market, has picked up substantial market share in almost every case. And it almost isn't even clear to me exactly where the market share is coming from, because it's not just coming from other malls within the market. It's clearly coming from other retail venues, the internet in some way. But the market share gains are really substantial. And of course, we really want to understand it, because we want to know, is this just a flash in the pan that represents an adjustment based on people coming out of COVID and spending in a different way, based on the accumulation of their savings that has obviously expanded beyond before. The savings have increased substantially from what they were pre-COVID. And will things go back to the way they were at some point when things, quote, normalize? That doesn't appear to be the case, at least thus far. But for sure, if there's one trend that these numbers don't represent, but which I think is the key thing that we focus on, is the best really got better and the mediocre really got weaker.
From this perspective of the best got better, how do you take that opportunity and turn it into something where the best stay the best and maintain that type of share over a longer period of time?
So I don't think it's a big idea. I think it's a lot of small ideas. So I think number one, you continue to evolve your merchandising. So in our case, for those of you who know Short Hills, for instance, we're increasing the size and the dominance of a number of the key luxury tenants. But yet at the same time, tenants, the mid-price tenants, have closed a number of their locations in the surrounding shopping centers, Freehold, Bridgewater, Livingston, Menlo, et cetera. And as a result, have consolidated their business within Short Hills. When you combine that with the demographic trends, which is people aren't working in New York, so they're not shopping in New York. People have moved out of New York, and we're picking up dominance and market share from other venues. It's contributed to an enormous increase in volume. All three contribute, if you wish, But it starts with, we have a unique merchandise mix to begin with that we continue to evolve. And the separation between us and everything else in the market continues to grow. Because even the mid-price tenants are now consolidating their locations. It also means they're willing to pay a lot more rent for the Short Hills location than they were pre-COVID.
That's very
So
interesting.
that, because they perceive of it being so important from a brand marketing standpoint, just in terms of their positioning within the market. And, and they also see the sales opportunity. But remember, the tenants are now looking at this currently. They're looking at it, number one, how much business can I do and how much money can I make in the location? And then they're also saying, what's strategically important for me from a brand standpoint? And then thirdly, how much business am I driving on the internet as a result of my location at Short Hills? So they're looking at all three, and all three are now contributing to their analysis of what they can afford in rent, which is now, thankfully substantially above what it used to be. Now, maybe that'll change, don't get me wrong. If demand falls off, if people go back to working in New York 5 days a week and, everything else, things could go back. I don't have a crystal ball. The war in Ukraine, the interest rate increases, all these things could have an impact on people's psychology that could change the way they spend. But for the moment, this seems to be the trend that continues to evolve.
Well, I mean, it's a fascinating take. No, but it's and it touches on points. And Ben, we had this conversation almost 2 years ago, talking a lot about these ideas of the mall-less marketing and etc. I wonder if you had any kind of big opinions or beliefs that changed in 2021 as a result of what you saw within the mall space.
Yeah, I mean, I remember when I was at Trademark and seeing the sales numbers we were seeing, especially out of the luxury and accessories and apparel and whatnot, and just crazy increases over 19, and wondered how much of that is stimulus, how much of that's pent-up demand coming out of lockdown. And it's wild to see that has continued, right? Despite tapering of stimulus, despite more and more of a return to normalcy, certainly more in some markets than others. But the fact that the REITs are reporting double-digit increases over 19 through 21, and anecdotally hearing that from other sources as well, I think that's very encouraging. Not to mention we kind of saw the peak of, maybe not the peak, but at least in a short frame of mind, the peak of online sale e-commerce penetration and how that has since retreated back. And so I think for people that were skeptical, right, all of these kind of data points reinstill the significance, the importance of the market dominant malls, especially, as Billy, as you were alluding to, and which you guys are fortunate to control a lot of those in great assets. So I think if nothing else, right, the last, certainly 21 and the last couple of months and the data we're seeing is very positive and encouraging. And January, February, frankly, your chart there, that trend has continued. And so, despite, Omicron and coming out of all of that, it's positive. And for the moment, feeling pretty good.
The only thing I would say is January and February were weak last year. So I don't think we're really going to know where the trends are settling in until we get to like April, May. And then we might be buffeted by increases in interest rates of the war in a way that depress consumer psychology. So we might not really get a full read until the summer. I tell you, our January was stellar in terms of increases over 2019. I think we had the biggest increase for almost any month we've ever had as a single month. Now, but it's against such a depressed number. Now, the run rate still exceeds the run rate of last year, but we're not really sure how much. It's still difficult to tell.
It's interesting, and one of the things that kind of was mentioned in kind of that earlier kind of conversation was this idea of kind of these regional shifts in kind of regions. So people moving out of cities, the opportunities that exist as a result. I mean, Ben, I'll start with you on this one. I mean, how has the way that mall owners, at least in your opinion, need to think about region or location changed?
Yeah, definitely. And, malls, and even I think broader, just across all the shopping center REITs and anybody that's investing in retail, I think has had a bit of a shakeup in their thinking, just in terms of the historic emphasis of gateway markets, West Coast, East Coast, New York, San Francisco, LA, Chicago. There's certainly been a shakeup just kind of in the disparity of performance of, more Sunbelt focused markets that, manage to stay somewhat more open and continue to conduct business have in a lot of ways, outperformed or recovered sooner. And I think, you're starting to see the other West and East catch up to that. Absolutely. But I think there's been an emphasis of, kind of a rethinking of maybe that allocation of capital and investment dollars.
I mean, that's interesting. And Billy, you were talking about this specifically in terms of that move into the suburbs. It does feel like there is this suburban retail opportunity that is uniquely powerful. And, I grew up near the Short Hills Mall, so that's the one that pops for me, obviously, when thinking of Taubman. But do you think we are kind of entering, we've heard this talked about quite a bit, are we entering this kind of golden age for suburban oriented retail?
So, I go back, the Brookings Institute did a study about 9 years ago, I think it was 9 years ago, where they identified the shift of a 30 or 40-year trend of urbanization in America toward people starting to move out of the cities. Now, they weren't necessarily moving to the same kind of environments that their parents lived in, but they identified the trends based on people getting married later, having kids later, therefore moving out of their apartments in the city later. But trend it was. And in a sense, COVID accelerated that trend. Having said that, there's somebody on this call who's probably going to make a comment that rental rates in New York City are higher than they've ever been at this point, residential rental rates. So people are clearly not abandoning the city by any means. It may be some evolution in who's in the city versus who was in the city. But it does feel like the suburban areas are picking up dominance and market share. Now, how much of this is permanent, I don't know. San Francisco's a disaster, for instance. I mean, I don't know, but that's related to security. People don't feel safe going to San Francisco. They don't feel safe walking around the streets of San Francisco. So they're just not going. I mean, God knows we'd all love to own Stanford, Palo Alto, which Simon owns, because talk about picking up market share. It's just been, it's an extraordinary thing to watch, how much, and San Francisco Center, the question is, what is it going to be when it gets reused? They're like, how the retail, I have tenants telling me, they're talking about closing in San Francisco, period, because of how bad it is. They don't feel that way, quite that way about New York, but, but they still are nervous about these urban areas because people don't feel safe going to them. So I think the security issue is a key issue that needs to be addressed by urban areas. And it is enhancing the flow of dollars from a retail perspective out of central communities into suburban markets.
I mean, the challenge is also, I think, even with the cities, there are some cities that are just, I don't, at least I don't believe there's any real kind of long-term negative for New York City. I think San Francisco was one of these places that was operating under somewhat of a bubble in terms of the how much of a certain industry was centralized, other challenges. So I think it exposed certain weaknesses in some areas that are going to be longer term. But a great question came in that I do want to address from Peter. And he said, what are your thoughts of malls as entertainment destinations, e.g. the American Dream in New Jersey? Can that model drive enough traffic to survive? What do you think is a good mix of entertainment and retail? Ben, do you want to start off answering that? And then Billy, I'd love your thoughts as well.
Yeah, no, absolutely. I think, whether it's, putt shack or luxury cinema or, food halls, there's all of those experiential elements are conducive and necessary, right, for a thriving environment, a center that's activated, 16, 18 hours a day. And absolutely, I think there's synergies there of having the right level of entertainment that, appeals to a similar demographic as your core retailers. I think, at the end of the day, it's all about synergy.
So I have a little different perspective. That's okay. I don't think there's one size fits all.
Yeah.
I think that
Agreed.
I think entertainment starts with the stores themselves and the experience of being in stores.
Yeah.
I mean, Short Hills Mall has no entertainment at all. Customers no interest in it. Okay, they're coming to Short Hills to buy. They're coming to Short Hills to go to Chanel, Hermes. They're coming to J. Crew, wherever. They're coming to buy. Okay, and they buy over $1 billion of goods every year at Short Hills. So they're not just coming to look, and they're not coming to go to the water park. And now on the other hand, do I think that entertainment works at Great Lakes Crossing or Dolphin Mall or Sawgrass? Absolutely. I think there are venues where entertainment fits very well, particularly with outlet or more moderate merchandising, and it can augment the draws to the shopping center. There are other reasons for people to come to the shopping center, and it works well with those kinds of merchandise mixes. So I think it's very appropriate, and you just have to find the right mix of uses, whether it's aquarium or Legoland. There's so many different, ideas out there. We have a lot of them in Dolphin, and we have a lot of them in Great Lakes Crossing. So it's not that I don't believe in it. And I think that in theory, a venue like American Dream as an entertainment-driven project could work. I think in practice, it's sitting in a market with no people, and it has very strong shopping centers around it. And people have to drive from their existing local venues, which are really good, and go to this mall that has almost nothing in it from a retail standpoint today. And it has a very, it's sitting in a swamp and isn't open on Sundays. And, there's nobody with any money who lives near there. So the question is there a reason for people to come? So it's not that in there, listen, Mall of America does well, Edmonton does well. They both do a lot of business, and they've both found a place in the market and use the entertainment as a draw along with department stores, but they all have, the difference is that Mall of America and West Edmonton have clearly distinctive merchandise mixes within those markets. So they have a clear point of view. And the one thing I would say is, don't think of entertainment as an end all and be all. It's an element, it's a piece. Right. And the key is that, I do a thing every year in our company where in January we sit down and we have to come up with a vision for a mall. And I don't let it go beyond 6, 7, 8 words, because if you can't say it succinctly, then you don't know what it is. So, Short Hills is the luxury shopping in Northern New Jersey. It's very clear what it is, and the consumer knows what it is. But you gotta have a point of view. You can't try and be all things to all people. Nobody can be all things to all people. You have to own a customer, and you have to be really dominant and distinctive for that customer. And it has to be a wide enough customer that it can drive enough traffic to have multiple uses within the shopping center be successful.
Interesting. I also wonder how much of the location aspect matters. Of even something like the American Dream, it's going to face added challenges because it has the Garden State Plaza nearby, because it has Short Hills Mall that's attempting to pull from, and these other markets that sit pretty darn close, let alone New York City. I think it adds a challenge. But one of the things of these kind of changes in these draws that we've talked about is, and I think the Short Hills Mall is a great example of this one specifically, is the idea of kind of this changing tenant mix. Industrious is one of the companies that has, I think I've fanboyed over more than almost anything else. This idea of, actually, Ben, I think it was you who turned me on to this, of co-working spaces within malls, and how that fits so well, even when you might not have initially expected it. Bill, in your perspective, how important is this changing tenant mix and these new types of tenants to the future of the mall?
So I think, malls have always evolved. I think, the great thing about the mall is the flexibility to evolve merchandising sort of within the 4 walls. The disadvantage of the mall is how difficult it is to evolve the merchandising and the physical plant outside the 4 walls, because all these department stores have rights that give them an ability to have a voice in any changes that extend beyond the mall, beyond the existing footprint. And so that's why it's so complicated to make major changes to malls, because you need to get everybody to agree, and you need to figure out how to get everybody happy in order to do it. Whereas within the mall, if you looked at a tenant mix from 10 years ago at Short Hills or 20 years ago, you would be stunned how different it is today. And even the tenants that are the same have built new stores. So sure, Chanel was there 10 years ago at 2,000 feet. They built 7,000 feet with the Peter Marino designed flagship. Gucci was there at 4,000 feet. They're building a new 14,000 foot flagship now. So it's even, and then there's so many new names. There's every direct to consumer, internet name wants to be a Short Hills. You name one. They're either there or they're coming, I assure you. And so that all creates sort of a distinctive merchandise mix. By the way, after they go to Short Hills, they're going to want to be in Garden State. They're going to want to be in other places. So we're going to have to continue to move, because what's special today becomes basic tomorrow.
Oh, that's so interesting. I mean, Ben,
But by the way, remember one thing. It's always about, today more than ever, it's about brands. It's about brands that matter. And the mall is simply a vessel for those brands. And the consumer in so many ways, identifies those brands and even goes to the Real to buy them used they care so much about. Goes to the metaverse and buys them in the metaverse because they want to be identified with those brands.
I want to get back to that point. Ben, I want to start with you though. How crazy, quote unquote, does this trend get? So co-working spaces, I don't think it's something that many people were thinking about 10, 15 years ago as a natural fit within malls, even though now it seems so organic and makes sense. How kind of creative can this get, or are there very clear limitations for where kind of what the mall can sustain?
Yeah, and Short Hills has Industrious, don't they, Bill?
Yeah.
We do.
Because
we do.
Yeah, I think it's been fun to watch them just because they were one of the early adopters of opening in malls and around retail. Scottsdale Fashion and Hudson Yards, and we're very early on to that. And I think just in the context of remote work, hybrid work, I work remote and I've got young kids at home, and I got to tell you, sometimes it's nice just to get out of the house. And when I do, go work somewhere else, I want to go somewhere that's got, great restaurants or coffee, or I can meet, colleagues or friends, after work. And so I think having all of those elements, is very appealing. And I think just the context of, having the ability to have multiple needs met. And I think there's certainly an aspect of, there's definitely one thing of, malls that are market dominant, luxury, absolutely, like everything Taubman is doing. And even to see that you guys have embraced like the Industriouses and, diversification of uses is really cool to see. For the malls that are having a tougher time kind of defining themselves, I think that's where the creativity of whether it's a grocer or a Target, or a smaller format or convenience, integrating those kinds of elements. I think there's still a lot to be seen in terms of how that plays out, just given the number of vacant department store boxes and malls that are maybe B+ or B and below. That will definitely need to be reimagined, whether it's educational or medical. I think there's still a lot to be seen there, and not in Taubman properties, right, Billy, but some of the other malls that have more vacancy than they know what to do with. They're going to have to be more creative in repurposing that real estate.
I want to touch on something, Billy, that you mentioned. You said it's the brands that matter. I want to challenge that potentially. You know what? No, I do want to challenge that. I think that the mall is a brand too. And obviously the brand stems from the retailers it has within it. But, we joked about this in the call we had last week prepping for this. The Short Hills Mall has meaning for those of us who are from Northern New Jersey and know the other malls in that area. It means something. And it's almost as if for certain retailers, especially when we think of, digitally native brands coming offline for the first time, being in that mall gives you a certain status because you're in that mall. So I wonder, and I'll go to Ben, you with the same question, but Billy, I want to start with you. Doesn't the mall brand matter a lot too?
I think you have to think of the mall. Sure, there is a brand of Short Hills, but at the end of the day, that brand, if you scratch the surface and say to the consumer, what does it mean? He said, well, it's the place that has Chanel and Hermes and J. Crew, and I have everything I can do together, and Gap and everything, yeah. But it has all those unique tenants that are special tenants. That's what it means. And I don't think it means, and by the way, it doesn't mean anything anywhere else. In other words, if you go to California, no one cares about the mall Short Hills. It doesn't have any meaning that transfers. It only has meaning within a given geographic area. And while it has meaning, it's really about the brands. In other words, the value of the brand of Short Hills is comprised of the derivative value of the brands that are there. It doesn't really rise to a level where its value exceeds substantially the brands that it encompasses. At least that's my view. I think when people think of Short Hills, they're really thinking of the brands in it, not the building that is Short Hills.
Ben, what are your thoughts on this?
Yeah, I think there's definitely, there's a perception, there's a reputation, and in less fortunate cases, a stigma, right? I mean, you hear of some, projects in certain markets where there's been, rampant crime, and, there's been a tolerance of shoplifting, and, crime has kind of run rampant, and it's like, do people feel safe? Is it clean when they go, right? I mean, and so I think all of those things, in addition to the brand, certainly play into the reputation and the experience. And, like I know from my wife, right, if she's going to go out with a couple of girlfriends, they want to feel safe. They want to, either to have valet or have a garage that's well lit, that's a short walking distance. So I think all of those things certainly play into the reputation and the brand, and knowing I'm going somewhere that I feel safe and feel good about it. At a basic level, I think just in the, the times we're in, we can't forget about just those basic necessities and the need to feel safe and cared for.
Interesting. Mark wrote in, it's the tenants that make the mall, not the mall that makes the tenants. I think I agree with it. I just think it's too simple, because I think we maybe potentially underestimate how significant, what the status the mall can bestow on. And it's the idea, and we talk about this a lot with like department stores, and we'll get into the next question, I promise. But this idea that discovery as a brand, and a place where I trust a specific entity to have the things in it that are going to satisfy me as an audience. And so if, for example, again, we've been talking about it quite a bit, well, let's continue down this path. If the Short Hills Mall brought in a digitally native brand that I had never heard of before, I would assume that it's of a certain level and it's for a certain audience because it's in the Short Hills Mall. So it doesn't take away from the fact that over this time that it's building up because you've delivered by having the right brands within, but that once you've successfully delivered on that so often, it kind of bestows trust to the newer retailers that come in. And I think this is kind of the next slide of these kind of rising retailers. Warby Parker, Allbirds maybe not as in favor at the moment. And Ben, I'll start with you here. It's one of the biggest trends we've been talking about, is these digitally native brands and product-oriented companies, so the Nikes, Lululemons of the world, owning their retail presence. Do you think this shift is kind of not going to fade, that it's going to be something more and more significant? We're going to see more and more retailers enter this frame of mind.
Yeah, definitely. I think the retailers, the savvy ones, that have embraced data, acknowledge the need for a physical footprint and the need for a location that resonates with their core customer. Again, it's all about demographics and psychographics and appealing to that audience. And so aligning with other brands that serve a similar audience, absolutely. There's going to be a need for that. And that's, an ongoing need. And, there's been cases of kind of the success stories and less successful, like Bonobos, for example, came out hot, but definitely had some struggles. And I think now has closed the majority of their stores. But now you've got, as you mentioned, Warby, they were one of the early ones and have continued to thrive. And I've got several pair of Warbys. They're great. Allbirds, right? You're seeing that, more and more. And so I think as the data supports it, right, it makes sense to expand and have a physical touch point with brands. I'm curious, I want to get Billy's take and hear of, you guys have done a ton of, direct to consumer deals, and which are your favorite or top of the list for you?
Well, I don't want to get myself in trouble by identifying stuff. But what I would say is what Warby has told everybody, so it's not like I'm talking out of school, is that they didn't want to build stores. When they originally founded the company, they swore they would never build a store. They were going to be an online only company. But when Facebook started to change the rules and started charging a fortune for advertising, they realized they didn't have a business model that worked anymore. There was no path to profitability if they were going to have to pay all this money to Facebook to develop traffic. And the one thing about the web is, unless you keep advertising, you lose all your customers, because there's 86 other companies that do the same thing that start advertising. As long as the venture capitalists are going to fund them, then they're going to take all your market share away unless you continue to advertise. So advertising on the web is kind of like rent to a retailer. You stop paying the rent, you lose the store, you lose the sales. You stop paying advertising. So what Orbi did is they said, well, let me try opening stores, because even though I swore I'd never open stores, I got no other ideas. So let me do this. So they opened stores, and what they found is if they were doing 4 million or 5 million, say they were doing 5 million in a market on the web, they'd open the store and they'd do 5 million on the store, maybe they lose 1 million on the web. But the combined would do 9 million, and they'd have the store, which created an emotional connection and an advertising venue for the market. So they could then double whammy, double positive, be able to spend less money on advertising because they were able to use the visual identification of the store as a form of advertising as well. So that the combination created a much, much more profitable business than was possible from an online only presence. Well, they set the way. You got to give them credit. They were the first one to really pursue this in a big way. They now have hundreds of stores. And of course, everybody else is following suit because they've discovered the same thing. That the same things that drove Warby Parker are driving everybody else. And so I do think this is not just a trend. This is absolutely the only possibility going forward, is that all these brands are going to need to have stores. Now, they may not need to have 900 stores. So the question is, how many stores do they need in order to maintain that brand image, stay in front of the consumer, and be able to create that emotional connection to consumers? Is it 100? Is it 200? Depends on what they're doing. But it's probably not, they're going to go to Short Hills, and they're probably going to go to Garden State. Are they going to go anywhere else in northern New Jersey? Not clear. Whereas in the old days, the Gap might have been in 12 locations in northern New Jersey. So it changes the mix, and it creates another reason that Short Hills becomes that much more distinctive and important. Because instead of like the Gap having 12, 15 locations in northern New Jersey, all of a sudden all these key brands, Vori, Allbirds, Alo Yoga, there's a whole stream of them that are either in or coming to Short Hills. And they're all the relevant tenants that the consumer cares about, and they're not going to be anywhere else. They'll probably go to Garden State one day, and that'll be it.
What's the push and pull like now that you have this kind of longer tail and this, you talked about this a lot of like, even from that perspective of the tenants make the mall, the brands make the mall. How do you identify and attract the right ones?
Well, I think, quality begets quality. In other words, I don't need to sell people on what the opportunity is at Short Hills. All they do is they call their compadres and say, how are you doing at Short Hills? And they get these tremendous success stories in sales. And what about they know? I have a jewelry store at Short Hills in 5,000 feet that did 11 million in the month of December. And, I don't need to make up any stories as to how somebody's doing. All I can tell is just give that store a call. So I don't need to, Blue Nile opened. I don't actually think it's the most beautiful store, but that's just my own personal opinion. But, I was complaining about the store, and then I saw the sales volume, I shut up, because it obviously didn't make any difference when I thought of when the store looked. The consumer loved it. That was all that really mattered. So I think that it's really about, it's not that I'm some great salesman, the product sells itself to a great extent. If it's appropriate for the tenant, so the question then is the rent. And the rent is really based on their sales. We don't have a market rent by space. We don't believe in that. It's not a commodity. Office is a commodity. It doesn't matter what floor you're on or whether you're on one side of the street or the other. If there's no interaction between you and the other tenants. All that matters in an office space is what's the deal. In retail, it's completely different. Where your position, the synergy of the way the different tenants work together, what property you're in, all those things are key. But they start with what's the sales opportunity for the tenant. And then we base our rents based on how much they can afford to pay, based on how much business they think they're going to do. So, it's a key of driving sales.
Yeah, it's super interesting. One of the things that we touched on a little bit, at least from the advertising perspective, is this kind of the digital reach. But one of the things that's been super fascinating, and you mentioned Mall of America at the top, they kind of very loudly in the press talked about making their mall shoppable. This idea of kind of the digital mall and that kind of online access to this physical asset. Billy, from your perspective, we're seeing this digitization come to the mall experience. What is the biggest advantage that this shift offers to the mall owner?
So it's a little more complicated than may seem apparent. So for instance, we did have pickup, curbside pickup. The minute the malls reopened out of COVID, it went down by 98%. I mean, no one's interested in curbside pickup at the mall. They're going to the mall because they want to walk around, they want to look at the goods, they want to cross shop. They're not, it's not like buying groceries. They're happy to have curbside pickup and have someone put the groceries in their car and not have to worry about running around those aisles and picking out their own oranges. But not at the mall. So I think where digital helps, clearly buy online, pick up in store. They're very happy to come into the store. When they look around, they may find other things. They may return things in the store and then go and shop and buy other things. All of that I think makes sense. It's not, I mean, one of my competitors' friends is working on a shoppable mall that they're actually in the middle of testing right now. And where they've got sort of 25, 30 stores that have given them their full inventory. And full is maybe a little bit of exaggeration, but given them the inventory, and they're attempting now to see whether people will be interested in figuring out, I want a black dress, who's got a black dress at Short Hills? And do they have my size, and do I like the look? That test isn't going so well, as I understand it. I mean, I think that there's interest, but I'm not sure there's interest in the digital version of the mall. I think people are coming to the mall. They're interested in digitally searching for goods that can replenish whatever on the brands. So they'll go to Lululemon and say, I need shorts, and then go to Vuori and say, I need shorts, because I'm working out, which I should do more of, obviously. But they're not so interested in going to Short Hills Mall and saying, okay, show me all the athletic shorts at Short Hills Mall. At least not yet. Maybe they will. You got to keep testing all these things and seeing as the technology evolves, and as consumer behavior changes, as the tech, as you get to 5G and 6G, maybe people then feel more comfortable. But it just really feels as if the mall's uniqueness is its physical geographic location. It represents a unique collection of brands and experiences within a given geographic area that people can then relate to based on their ownership of that, in relationship to that geographic area. It doesn't lend itself so immediately to a non-geographic location awareness.
Interesting. So Ben, with that in mind, what do you think is like kind of the digital accomplice to the mall, or the digital complement to the mall experience, or if you think there is one?
Yeah, I mean, I think there's a lot of synergies. There was a study done on like Macy's, for example. They found their online sales were 3x higher in stores where they had a physical presence versus not. And there's been a lot of analogous studies over the years just on the halo effect. And I think that's a very real, I think we've proven out that that's a very real phenomenon that exists. So there's definitely got to be, I think Nordstrom has done a great job, Lululemon's done a great job. These companies that manage their inventory in a way that you can see, okay, what's available at the store down the street, what's available if I happen to be driving across town, and if it's online, like if I don't need it for a couple of days, what's available online. So I think integrating inventory and just having full visibility into what's going on, giving the consumer as many options as possible, is really what is allowing brands to succeed. And a lot of the D2C guys that were built online have, they've embraced data from inception. And so they've got as much or more data than anybody on who their customer is, where they live, what other sites they're visiting, where else they shop, all of that data. So it's, it's just been interesting to watch the data kind of come to the forefront. I think this slide kind of lays that out, just in the shifts and trends, and how web search is a leading indicator for physical activity in the physical world.
Yeah, I mean, you touched on something so important, in that these things are not conflicting. I think we had this perception even pre-pandemic, in the early days of the pandemic, maybe even until the end of last year, that it's online versus offline. Whereas I do think it's this idea of, if I'm going to go to the mall, I'm going there for a reason. I don't need it. I don't want to have an e-commerce site like I would, if I'm, going to bestbuy.com. I want to have something distinct, but I do like that idea of, all right, I found I found this thing that fits great, but I have it in purple and they don't have it in, I don't know, red, which I wanted in. Can I then use some digital element to get that product to me? I think it's the complement, it's something that augments that mall experience. And with our last slide, then I want to get to a couple of questions. I want to ask you both the same one. And this I don't know if new is the right word, but let's go with this. Of this new mall or the next phase of evolution for the mall, what does that mall of the future look like? What does that next phase of the mall look like? And what are the elements that define it? Ben, let's start with you. And then Billy, we're going to close out with you on the same question.
Yeah, I mean, I think Billy hit the nail on the head early on. It's landlords that are investing, upgrading the tenant mix constantly, listening to the market. And really, as you pour into that, it's a synergy. It's kind of a snowball effect of the brands that support one another and attract that key audience. And it just, the more momentum you build, it gets stronger and stronger. So I think that's really the distinction, right? Is the landlords and the investors that have a position to be able to reinvest and evolve are the ones that are going to stand the test of time.
That's a great one, Billy.
So
and you for the grand finale.
Okay, I have an answer, but I apologize for this. Do a little thing to begin with. One of the things Macy's told me that was a test they would have never done is during COVID, when they closed all their stores, they were able to see the dramatic impact on online. And so one of the reasons they made the decision not to close all the stores they announced they were going to close, which they've quietly stopped closing, or they've sort of made that clear in the conference call, was because they had this real world test of how they were impacted by the closure of the stores. And of course, given how much more profitable the stores are today than they were pre-COVID, none of them are losing money. So there's no reason to close them. So let me go back to your other question. I think there's not, I want to go back to an answer I gave before. There isn't one size fits all. There's not one answer as to what the mall in the future is going to be. But I think what the mall needs to be, whether it's Dubai Mall is a particular thing with a lot of entertainment, or Mall of the Emirates, we've seen those models not dissimilar to Mall of America, et cetera, sort of an evolution of it. But all these projects that are successful, Tyson's Corner to Houston Galleria to Short Hills or wherever, have a clear position within the market. They got a good location, they've got good access. They have the table stakes, the things you just have to have in order to be successful. Period. But mostly, they really have a continuing investment and involvement of merchandise mix, and could be mixed use or not, depending on the circumstance and the situation. But they they know who their customer is, and they do everything they can to ensure that they're the most up to date at addressing their key customers. And they're not trying to be everything to everybody. They're trying to be everything to certain people, and that's what's going to define success.
As about as good of an answer as you could give. It's one of the things that always fascinates me is how when you speak to those, whether they're running successful retailers, successful properties, they have a very keen understanding of who their audience is, but perhaps even most importantly, who their audience isn't, what isn't a fit for them. And I think that kind of editing, so to speak, is so critical. I want to get to some questions. There was some great ones that came in. So I want to address one of, here's one from Matthew. What types of experiences should retailers be creating inside the store to engage their customers? This is about the retailers specifically. Billy, do you want to start?
Yeah, so I think it's less about the way the question is drawn. It's as if, should I put a Ferris wheel in the store? It's not about that. It's about the entire experience being entertaining and exciting in and of itself. You go into Chanel, the whole process, the packaging, the whole thing, she takes it out, she shows you, etc. Whether it's that or J. Crew coming in, or the Gap, or wherever, the experience itself is the process that you go through in the physical environment. And, obviously luxury stores do it even more, but it can be appropriate at every single level. It can even be appropriate to Target. Look at all the displays that Target's added to their attempt to departmentalize in terms of what they're doing. It's to improve the experience of being in their store and the excitement of shopping within their environment. So I think at every price point, at every level, there's a way of making that experience special and addressing the consumer. And it all sounds easy, but of course it's much more difficult to execute. How many stores have we walked in? You can't find a salesperson. The merchandise looks disheveled. They've got broken sizes.
Mhm.
I mean, one of the biggest challenges we have in the mall business is people. Our stores can't find people, and when they find people, they're not qualified. And so, and you walk in the store and it doesn't feel good. Doesn't feel like they're taking care of it. It doesn't feel special. And so I think that's really what I mean by creating an entertaining experience. Now, obviously, in some situations, entertainment itself is an important element of the overall merchandise mix. But it's really, it's for those locations where it makes sense.
I mean, the idea of experiential as the actual shopping experience, I think for some reason that gets so overlooked that it's kind of surprising that, you forget that, no, it's what you actually, something as silly as, it's a Bath and Body Works where you walk in, you kind of smell all the candles, and there's this kind of, it is an experience. It doesn't have to, and, have something more, it doesn't have to have a climbing wall in order to get people excited. Ben, I want to go to you for the same question. I'm sorry, because I know you were going to say Ferris wheel in the middle of the store, so you'll have to change your answer.
I was, but run right behind Ferris wheel. No, I think the brands we've talked about a lot of them. The Warby. I mean, look at Apple, look at Lulu, even Takova's boots. Clicks to Bricks, D2C company. They're all very intentional about editing, about their curation. It's concise, it's clean. And it's easy to find what you're looking for. Knowledgeable sales staff, friendly. You're greeted by somebody that knows what they're talking about, that's an expert. And even at Takova's, they'll offer you a bourbon, or a beer. And so I think just, a relaxed environment and one that's catered to, again, to the audience is really what sets the brands apart. Not just, hey, we're going to put the merchandise out, and if you like it, come buy it, right?
Yeah. It's an excellent point. And I want to get to one last question, then we'll call it. Doug asks, are you seeing malls being repurposed to other asset classes? And I'm going to add to that question. Is there obviously every situation is unique, but is there a perspective that you need to bring to the table when attempting to understand whether a mall can be repurposed effectively? Billy, do you want to start?
You wanted me to start?
Yes, please.
Oh, sorry. Okay. It's really tough. There's a reason why not that many have been done at the scheme of things. It starts with location and what the demand is for alternative uses within the location. Very often there's a lot of residential demand. That's great. I mean, you got to understand why the mall closed. Did the mall close because the neighborhood has changed in such a way that it's no longer investable as it was? Or is the mall closed because maybe it lost out in the market share competition with the mall down the street, but fundamentally the location of the dirt are good dirt and the market is a good market? Then you've got to figure out the zoning issues, and you got to figure out how you're going to control it, because you can buy the mall, but every one of those department stores can control your destiny because they control the site plan. So you then need to go buy out each of the department stores before. It's like a checkerboard in a sense. You need to control the whole board, not just a few of the squares. And so that's why it becomes very difficult. You got to assemble the site under your control. You got to then get the zoning changed, because generally these malls were done in zoning districts that were created for them, and you may not permit residential or other uses to be done. So you're going to need to create a new zoning classification or have the mall rezoned into a new zoning classification. And then you got to tear everything down, or tear a portion of it down, maybe leave a portion of it, tear the balance down, etc. And it gets complicated, to say the least, and it takes years. So you need to have the staying power to be able to endure going through all this. But if you can, I mean, the best example is the one Related did in Silicon Valley, where they took an old failed mall that was a fundamentally good location, but it had lost out to Valley Fair. And, they're redeveloping, and I think that's going to be enormously successful. They're going to make oodles of money on that project. But that's sort of a bit of the exception that proves the rule. Most of these mall redevelopment projects have been really tough to pull off. And, a few of them have done well. Amazon's taken a bunch of warehouses, and I'm sure they'll take more. I'm sure that's a viable use for them. But I think that the great thing about the mall is it's a machine, particularly a two-level one. It's a machine that's been created to do one thing as efficiently as possible. The bad thing about the mall is it doesn't do anything else very well. And so the problem is when you want to redevelop the mall, particularly the 2-level mall, it gets really difficult to figure out how these uses will fit given the constraints of the existing physical plan. 1-level malls are a lot easier because you're basically everything's on one level, so you could figure out how to combine the buildings and how to repurpose the buildings much more easily. The parking lot is all on one level, so therefore you don't have these grade change issues that you get into in a 2-level mall. So it's much easier in a 1-level mall. You still have the checkerboard issue of being able to consolidate the department stores, but at least from a physical standpoint, there's greater likelihood the building to be reused in some way.
That's interesting. That's interesting. And with that, everyone, I want to thank you. First of all, thank Billy, Ben. Thank you both so much for joining us and sharing your expertise and your insights. It was such a pleasure having you. Thank you all for joining us today. We really appreciate your time and you taking some time with us. Look out for the next webinar, which we're going to be having next Thursday with Simeon Siegel from BMO. So please tune in for that. And again, Ben, Billy, thank you so much for being here and have a wonderful rest of your day.